Oh yeah, so happy New Year, everyone. Yeah, it's been a while. So, but this is what I'm gonna do. I'll make sure every week I drop a video, at least a video on every single trade I'll be taking because this platform will serve as my personal journal, okay, along my journey. Yeah. So, today is uh today is Wednesday. And market opens Monday at where market open here. Come on, minute, please. What's wrong? Let me just refresh this. Nice. Okay, good. All right, cool. All right. So let me just give you a breakdown. This is gonna be a quick one, just for you to see the reason why I'm in a sell on this particular trade. I've been on this trade for let's say a couple of hours, like let's say 3 hours now. Yeah, but I'll give you a breakdown of how I am the sell on this market. Okay, so let's dive right in. Okay, so last week Friday and Monday. Okay, Monday. All right, let's drop this here. So this year, okay, let me make it very thin. Change the color. Change the color to. Can you see this? Well, let me use something a little bit deeper. Cool. I think this will be okay. Yeah. So market opens here. All right. So this was Sunday. Okay. So let me go to 1 hour just to be sure. I just want us to get the actual place the market opened. Good. All right. Fine. Our market opened over here on Monday. That's this week. Okay. So Friday, this happened. Okay. This happened. All right. So let's now go back to the reason behind I'm selling, I'm shorting. Okay. I'm not just in this trade reason because I want to sell. No. I analyze the market properly. Let me say the way I approach the market might be a little bit different, but with the videos I've dropped, I'm sure you'll be familiar with how I analyze the market. All right, so let's start. Okay, we're having another block over here. Okay, that is one. We're having a fair value gap here from this blue candle to this. Okay, so you're having a fair value gap over there. The market closed within, tap into this region, and the market sell off on 4 hour time frame. So the market is telling us that okay, oh, with all this up movement, okay, this moves, okay, when I get to this region, I'm coming to retrace a little bit, then I'll continue to buy, or I'll retrace, then reverse, then continue to sell. Okay, that is what this is telling us. Okay, so now after saying this, okay, I drop down to 1 hour time frame. I divided this 4 hour into four. So I drop down into 4 hours. I can move to 2 hours. Okay. Still you still get the same point, like same scenario. All right. But just that the fair value gap on 4 hour moves here. Do you get? So now let's go back. So if you're using 2 hour time frame over here, there's the fair value gap the market haven't retraced into before it to shut completely. But that because of more picture for we to understand what we are doing. So, but when you get to 1 hour time frame, you see that this fair value gap on 2 hour, the candle has already retraced into it before selling off. So that simply means that if we are still waiting for that candle on 2 hour time frame, we'll be waiting forever. That's what that simply means. Okay. So now we are back. We are down to 1 hour time frame. So don't forget the logic. Don't forget your first idea. Your first idea was the market has tapped into an order block, okay, and it retraced and it break the fair value gap on 4 hour time frame. So let's delete that. It's valid and it's there. So now, currently, this is the highest price of the market. Currently, the highest price of the market is 4,500.560. Okay, that's the highest price of the market. Okay, we have the higher high, higher low, higher high, higher low, higher high, higher low, higher high. We have what? Lower low. What? Higher high. So let me now break this down so you can get it. On 1 hour time frame, we're having a fair value gap that has been tapped. Okay, it's been tapped by this week. You see this blue candle. Okay, all right. That was where I put this my stop loss. All right. So we have this here. This fair value gap on 1 hour time frame, it's been tapped. So what do we need? What do we expect? We expect the market from here to sell off. And what happened? It happened just like that. But after the market sell off and take out the liquidity below this, okay, you notice what happened. Let me just change this liquidity graph. What happened? This is the liquidity graph sign. What happened? The market would buy off. And when the market buy off, it closed within this fair value gap. It doesn't end the run, and it also came to this premium fair value gap, okay, and wicked it, but never closed within. Rather, it wicked it, then closed below. So it's telling you that the sellers are still in the market. Okay, that means the selling pressure it's more than the buying pressure. Okay, the selling pressure it's more than the buying pressure. So now this is what I'm saying. This is the fair value gap. Okay, this from this blue candle low to this black candle wick. This is the fair value. So that the market PSA and what close under red. So it's telling you that sellers are in the market. Okay, if you use support and resistance level or you use whatsoever, you can say this region. Okay, the market never break this. Okay, and the market got here. What happened? It sell off. It wicked it. Then the next candle, it sell off. And when it got here, what happened? Is like it punches to the sky, like it push up and close above. And see what happened to the next candle. The next candle wicked it, never closed below, rather closed above. These are information the candlesticks they are telling us and the wick. Okay, so let's move forward. This giant candle, what happened? It closes below. This retrace into it. The next candle closes below, and what happened? It sell off. Let's check then. Let's say you even enter from this region. You didn't enter from here because we need a confirmation. All right. So from here, you'll be getting 200 plus 2000. Sorry, 2000 plus. Uh, what's it called? okay, movement. So with this, you still make it. But we are not in the market and stuff. But definitely every time market shows its answer. So back to what I was saying, as I was explaining, yeah. The market weekdays, all right, and close below. Don't forget that the same thing also happened here, but this never closed this fair value. Rather, this one left space. So that is saying that there is pressure in the market. So the sellers are in the market more than the buyers. Okay. So the selling pressure it's more than the buying pressure. So that is what this is telling. Same also applies to this, but this one closed the entire fair value gap. And what happened? The next candle that print was what? It was black candle. From there all the way down, down, down. I entered here, the market got here. I left it running. I left the market running. I was like 1 point something, yeah, 1,000 something plus. See, almost yeah, like yeah, 4,000 plus. But I'm not cashing. What's it called? I'm not taking the profit. So that is why I left it. I'm like, let it run because I want to see what the market is going to do. Because I might take profit. It's here, the gap here. It is the gap here. So I'm giving you the reason behind the trade. Okay. So, but you can also use this. Okay, if you are using support and resistance level because it's also valid. Yeah. So back to what I was saying. After the market weekday closed below, and the next candle that printed was black. That is the sellers are in the market. The following one, this. Look at the candle formation. I see the pressure here. There's the fair value gap here that was supposed to be respected, but rather the candle closes within and printed black candle, which is selling. Do you know why? Let me show you. Reason being that there's an order block here on one hour. Is an order block. So the 50% of the order block, that is where the market got to, and it closes below. If you said, okay, this is your order block, if you are using this as the order block, you'll be taking out. You look for the highest candle and it's weak. So you mark it out. You see? So this is a 1 hour OB. Okay. I was like, okay, I've entered a trade because I was expecting the market to respect this fair value gap, closes below, then sell off. Okay. Because I entered somewhere here, even before this what's got this form up. Okay. I entered somewhere here that the market will retrace, then come down. And the market actually, came down, but rather the one that come to pierce the fair value gap that close with him and touch and pierce our 50% order block. So I'm telling you the reason why I'm in the trade and why I'm still holding the trade. Okay. If the market closes above this order block, if the market closes above this order block, if market closes above this week, this 1 hour order block, that simply means that I'm closing everything. I will just take my loss. I'll cut my loss. When the market closes above this, I cut my loss. But if the market just wicked it and closed within, still within, I'll still hold it. But once the market closes above this, when the market closes above this OB, we mark it out 1 hour OB. Okay. When the market closes above this 1 hour OB, come on, I'll cut my loss like that. I'll cut my loss. Okay, so that is the reason behind the trade. Okay, you can say, oh, there's still space here that the market can come and trade, come and retrace to before it to sell off, oh, you are making points. Yeah, but I just don't want to risk much. Okay, I don't want to risk much. But don't forget, if the market will close above this other block, are you telling me it's just going to come here, then retrace back? No, rather it will continue going up. That simply means that the market is saying that, okay, I'm not coming down now. The buyers are in the market more than the sellers. So the buying pressure will be more than the selling pressure. That will make the market to go up. So let's go down to 15 minutes. All right. Actually, I place the trade on higher time frame bar. You can also use, if you want to monitor the trade, you can use your lower time frame also to monitor the trade if that's okay with you. All right. So let's go. Okay, you can see this is our order block here. Fine. The market pairs this, you sell off. Okay, you sell off. The market go to this order block, market buy. Okay, that is on your lower time frame. But on higher time frame, you are seeing a bigger picture, and you are looking at, you are not just taking the trade for a day. Okay, the trade can be like, you can take 1 day trade, you can swing the trade for like 2 days, 3 days, 4 days, 5 days. So that was the intention behind this trade, because I want to allow this trade to give us maximum profit. Okay, yeah, I want it to give us maximum profit. This account is 100K account. So it was last year account. I was not serious about the account, just blowing the account. I'll lose some, gain profit, lose. I want to be consistent about this account and see how best I can grow this account within the month of January from 108. Okay, I want to see how much we can get by the end of January, how much you will get and how much you're going to lose. You're not going to over leverage. Okay, we are sticking to our rules. Okay, yeah, and our regulation. Any trade we take that trade, we owe the trade for we to get our maximum profit. But if the trade, we realize that the trade is not going to go in our favor, we cut our loss, then we look for another entry. All right. So, and we don't do revenge trade. All right. You can say, okay, this is what is for me a W pattern. So it's a reversal pattern. But you are not sure. Okay, you don't just conclude by that, because higher time frame tells you the actual thing that is happening. Higher time frame tells you the actual thing that is happening. You see, it's W pattern. All right. Then it reached this region, it will come back, then stuff whatsoever. Okay, everybody with their strategy, their stuff, but mine, that's what I'm seeing on higher time frame. So I'm using higher time frame as my confluence. So the lower time frame is just like, I wouldn't say much, but I just sometimes I just watch it and see the reaction of the market. Okay, but let's go to 5 minutes. I want us to understand something. Yeah, if this market will be going up, what happened here wouldn't have happened. What happened here? Okay, let me change this to red. What happened? No, let me change it to gray with that one. Yeah, what happened here wouldn't have happened. Why am I saying that? On 5 minutes here, this is highest price market got to before a retrace. Yeah, and this is our low on 5 minutes. Low, high, low, high, low, high, low, high. Do you get? The market moved from here, from this region here to this region. Okay. The market dropped down and the market went up. It came down, went up, came down, and went up. You see, when the market got into the OB, the 1 hour OB, see what the market did? The market retraced. It break the 5 minute low, okay? Break this 5 minute low, retrace back into it. So let's You see, all of this is telling you, okay, the market is not going higher, it's still going to sell. It's just kind of trapping some people. It's trapping some people. You need to collect liquidity from people. But if you are calm and you hold, like you are so comfortable with your strategy and your analysis, allow the market to do a thing. Allow the market to do a thing. So let's check this. Okay, the highest price is 4,468, right? From here to here. The market has gotten to what? It has gotten to its 50. It even passed the, okay, let's use this 50%, not this. This happened, this high caused this low, and this low caused this high, and this high caused this low, and this low caused this high. Are you getting it? So, like this, if you enter from here, if you put your stop loss here, okay, you enter somewhere here, and you'll be taken out because you'll be inducement. That's liquidity. You understand? But if you take your time, and analyze the market from the higher time frame, you will get the actual picture. The only thing is you need to have enough room, okay, like enough stop loss for you to allow the market to do whatsoever it wants to do. All right. And you can go to the lower time frame. Then the lower time frame also will now show you, it will give you an insight of what the market is about to do. Okay. So going back to what I was saying, okay, this was the low and this was our high. The market break it, closed below this, entered. So on our 5 minutes here, this over here is our order block. Let's just mark it out. I'm coming. Let me mark it out. Let me, okay. On 5 minutes, this will now be our order block. The highest week, okay. All right. So this is now going to be our order block. This blue candle and this black candle. All right. That is our order block. Why is it our order block? It is the highest week and they are equal, almost equal, like almost equal. Okay, but see what the market did here. Market tapped into it and rejected. So now the market can still tap into it, go to the 50%, even 75% to definitely sell off. So we allow the market to do a thing. So I've entered the market on higher time frame, okay, which is this. I entered over here. I entered over here, and the market sell off. Okay, market buy. All these things, all they are just noise. Okay, if the market closes above, even let's say the market closes above these two, I'll start cutting my loss. If it closes above these two, I'll start cutting my loss. But if it closes above this finally this week, now I'll close all the trade. So I'm using 150 lot size on this trade. So let's see how this market will plays out. So we'll see by the close of the week. Today is Wednesday. And today is Wednesday. So by Friday, I will drop another video that will be an update on this trade and how it's going. So guys, have a nice evening and see you. Bye.